Hey everyone, welcome back to the channel. It's your name here with your daily market update. Today is September the 26th, 2024, and as always, we've got a lot to unpack. From Wall Street to the global Forex markets, there's been a whirlwind of activity today, so let's dive straight into it. Starting off with the stock market, it's been a mixed day across the board. The Dow Jones dropped by 0.8%, while the Nasdaq managed a slight uptick of 0.2%. But the real story today is the S&P 500, which dipped around 0.5%, largely due to investor concerns over the Fed's next move on interest rates. Inflation data came in a bit higher than expected, and you know how the market reacts to that. Tech stocks showed some resilience, though Apple and Tesla managed to edge up slightly, recovering from the declines we saw earlier in the week. But if you're holding financials or consumer discretionary stocks, it might be been a rough day for you. We saw significant pullbacks in those sectors due to concerns about consumer spending cooling off. Now, on to the Forex market. The dollar continues to show strength against the major currencies, with the USD, EU pair climbing to a 6-month high. The euro is struggling as European inflation remains sticky, and the ECB seems hesitant to tighten monetary policy further. Meanwhile, the GBP USD pair dipped below the 1.20 mark for the first time since February. The UK's economic data isn't looking too hot, and traders are starting to price in a possible rate cut by the Bank of England in the coming months. So, what's driving the markets today? It all comes down to a couple of key trends: inflation and interest rates. As I mentioned earlier, inflation is still the major concern, especially here in the US. Investors are keeping a close eye on the next Federal Reserve meeting, which is right around the corner. Tech versus value stocks. We're seeing tech stocks holding their ground, while value sectors like financials and industrials are taking a hit. This could signal a shift in investor sentiment as we move into Q4. Forex volatility. With central banks around the world taking different approaches to monetary policy, expect some wild swings in Forex pairs, especially with the US dollar dominating the landscape. Looking ahead to tomorrow, what should we expect? Well, if you're trading stocks, keep an eye on the jobless claims data coming out in the morning. Any signs of a weaker labor market could send stocks tumbling even further, and that might offer some short-term buying opportunities. On the Forex front, all eyes will be on the Bank of Japan's policy statement. If they signal any changes to their yield curve control, it could send the yen skyrocketing or tumbling, depending on their tone. Alright, that's it for today's update. Make sure to hit the like button if you found this useful, and subscribe so you don't miss tomorrow's forecast. Drop your questions or thoughts in the comments below. What are you keeping an eye on in the markets this week? Until next time, keep your eyes on the charts and your trades sharp. See you in the next video.